Good afternoon and happy Thursday, everyone. It is Scott Wohlers with River Place Capital. It is Thursday, October the 27th, and just wanted to take a brief minute to touch on what markets did last week. It was a very positive week in the equity markets as the S&P 500 finished the week up 4.74% on the week, a very solid week. The mid-cap index was tracked by the S&P 400 was up 2.4%. And the small cap index is tracked by the S&P 600 was up 2.6% for the week. And this is really off of the back of strong corporate earnings that we got throughout the week. Last week, the banks reported, some industrial names reported, and they were very, very strong earnings so far. And so we also got some Fed speak last week where there was maybe a path of we're going to get 75 when the Fed meets November 1st and 2nd, and the Fed press conference will be November 2nd, where the announcement comes out on the Fed more than likely will raise the rates by 75 basis points. But maybe after December, there may be another rate hike, but maybe that may be the opportunity for the Fed to pause for a minute to see and let the market digest what they've done by moving interest rates up to about between 4 and 4.5% is the thesis right now between economists and Wall Street alike. So we move into this week and we got some bad economic news on Monday with the housing data coming in with housing prices decreasing at the largest record on pace month over month for the month of August ever since the index goes back to 1987. So the market really rallied off of that. Why is that? Remember, we're in this environment where bad economic news is good news for the equity markets. It means that things are slowing and that the Fed's not going to have to raise as much or go as high as many may fear. And so you saw the markets rally as well as we've continued to get strong earnings this week from your industrials, your healthcare companies. But one thing that's been very interesting this week is we've gotten the earnings of the mega cap tech names. And for the last 12 years or so, these names have really been what has driven the markets higher and has been leadership for the last 12 years. Well, we've got earnings from Microsoft, Alphabet, which is Google, and then last night we've got Meta, which is Facebook earnings. All three of those large cap tech names reported disappointing earnings and gave disappointing outlook for Q4 of this year. And you saw those equities really tank and go down significantly in the market. But one of the very fascinating things is if you've been watching the Dow Jones Industrial, it has continued to march higher each day, even on the backs of these corporate tech, big cap, mega cap tech names reporting disappointing earnings and their poor performance in the equity markets. And so what that has us telling us is it looks like it might be a change in leadership in the equity markets where we're returning to more of a value-oriented type of investing where industrials and healthcare and financials are going to be the outperformers in this particular environment. Think about it. Financials are in a great position. We are in a rising interest rate environment where they aren't as quick to raise rates on their deposits. And they're raising rates on their loans very quickly as their margins are expanding. Industrials are able to price in with inflation these price increases, and the consumer is still strong enough to continue to spend money, and their earnings and margins are expanding as well. And healthcare with new therapies and existing therapies is continuing to do well. And so these sectors are doing incredibly well and holding up well. And so you look at a day like today, where you have the backs of poor corporate earnings from Meta, you have the NASDAQ currently as we speak down around 1%, but the Dow Jones Industrial is up 1% right now. So you're seeing a lot of divergence in the equity markets. The S&P 500 is slightly negative right now, but the equal weight S&P 500 right now as we speak is positive. And that's more of the value sector that's driving the equal weight up in the indices. So as always, if you have questions about how to navigate through this or how to position yourself on the backs of these earnings and what these large cap tech names are telling us, call us. We'd be happy to talk to you, tell you all about what we do here at River Place. You can call us at 904-346-3460 or always check us out online at www.riverplacecapital.com. Have a wonderful rest of your week, everyone. Thanks so much.